Kevin here, top 100 financial advisor, two-time author, one-time bestseller. And as always, we're here to discuss the stock market. My camera's not working. I will see if I can get that working for you in just a second. As I'm doing that, though, make sure that you go to buildingbread.com/free class, and I will show you how you can start investing, even if you're a beginner, because there we go, we're working. Because when the market is acting a fool, is what I like to call it, there are some things that you need to know. And yes, the market had a terrible day today. This is not the end all be all. I have some good news and I have some really obvious news that can save you a lot of money. So I want to discuss that. You want to make sure that you hit the share button right now. If you are on here live, hit the share button. If you are watching the replay, hit the share button right now. I'm going to do that on my phone as we speak. And these are things you can watch yesterday's video or the day before that where we have talked about this explicitly about what was going to happen, and that is playing out right before our eyes. So go ahead, hit the share button, and let's go ahead and get to it. All right, so as we know, the stock market had a huge fall today. In fact, it dropped more than 1,000 points. Excuse me. This is the worst drop that we have seen in a single day since about March 17th or so. So we lost about 3%. I want to say around anywhere between 3 and 4% off the stock market in a single day. That is significant. However, context, as I've told you guys before, context is important. The market was up 40% since March. You lose 4%, that's not great, but if you have been investing through March, you are still okay. People are already panicking, even though we had an unprecedented run. We had the biggest 50-day run. We did a video on that. The best 50 days in the history of the stock market, just like a week and a half ago. And people have already forgotten that because of one bad day. I also told you yesterday or the day before when we had broken even, I said that this isn't over yet because of what? We still don't have a cure. We know people are protesting and the virus could come back. There could be a second wave. We already knew these things. We already knew that employment wasn't great. But the reason why we're running into this right now is because of speculative traders, people who were just jumping into airline stocks without understanding the business. We've talked about this. I've been on the record about why I don't like the airline stocks. It's people who were jumping into bankrupt stocks like Hertz and others. They only invest, because it's bankrupt, and I'm hoping and thinking that maybe it'll bounce back. Some people got lucky, most did not. So you can see here in the CNBC article, maybe tomorrow the stock market will be better. We will see. This guy here says that some stocks have gotten ahead of their skis. When you see some of these airlines priced at the level they were before things started, but they're only saying they're going to do 60% of their business. Like, really think about that. Why would American Airlines jump however high it jumped? But why would American Airlines be trading at the price it was before the virus when they're telling you outright we're only going to do 60% of what we were doing before? That doesn't make sense. That doesn't add up. If the stock should go right back to where it was beforehand, you should be doing 100% of the business. But this is the speculation. I told you guys yesterday there's a difference between the economy and the person walking the dog, and a dog can do all types of things that actually don't make sense. This is a part of that the market isn't necessarily making sense. There is no reason why Hertz was up 2 days ago 100 and something odd percent. There's no reason why American Airlines was up 40 something odd percent. That doesn't make sense because American Airlines is not 40% better than what it was the other day. That's not true. They are doing the exact same business they were doing earlier this week. That has not changed. And we already known about the virus. We already know there's no cure. And we already know that there's likely to be some sort of second wave. Hopefully it's not as bad as the first. We knew that already. And the other thing that you have to realize is no matter what you're investing in, this is why I tell you guys to invest in quality and invest in the long term. Because when you look at the actual business, nothing has truly changed over the last week or over the last day or 2 days. However, the stock market feels like, oh my God, the world is coming to an end. It's overreacting. It's running off and chasing the squirrel. When in reality, things haven't really changed that much. American Airlines still is running their airline at 60%, which is not good. Therefore, logically, the stock should still continue to fall or at least stay the same. It shouldn't be bouncing the way it is. Same thing for Hertz. If we're still at 60% capacity and people still aren't traveling, why in the world is Hertz going up? For what? For what reason? Just because people think it is, and you got a bunch of people who don't understand the business of Hertz jumping into Hertz. Examples: we know American Airlines, as well as Delta, as well as I won't throw JetBlue in there, as well as Spirit and others, and Southwest Airlines being an exception, have all been down since 2007. No one here would invest in any business that's been down for 13 consecutive years. For 13 years straight, no one's going to do that. No one's going to jump. I think Hertz has been down for like the past 5 years or so. No one's going to do that. But if people were jumping into it, it pumps up the stock, people get excited, and then everybody else tries to move into it, and then it collapses. This is what we're seeing now. It's people being speculative and things not making sense because too many people are trying to make a quick buck, and that's not how things work. You will almost always get busted at some point, and this is that example. So this is what you're seeing in the market now. Now the question is, what do you do right now? Where should you invest? Is this a time to invest, or should you just sit it out and wait? My advice has not changed. It is always a time to invest. It just depends on what you invest in and how you invest in it. My argument has always been, and will likely always be, invest on a consistent basis, invest in quality, invest in index funds. And you just continue doing that. That's it. So it doesn't matter what happened today. It's not going to matter what happens tomorrow. And I don't know. I'm not here to tell you that this is going to continue and drop further tomorrow or go up tomorrow. I don't know. I know that it is June and I'm investing in June. When July comes, I'm going to invest in July, and so on and so forth. I'm staying consistent regardless of what the market does. The other thing that we need to consider from an emotional perspective and a logical perspective, people are emotional and they react in ways that don't actually make sense. How in the world we lost so much in the market going back to March, right? We lost so much money going back to March. Go back and scroll your timeline, go back to your Facebook groups, check your text messages, go back to mid-March, go back to March 10th, March 11th, 12th, 13th, and 15th, and look at what you said and how you felt about the stock market then. Go back and look, and people were upset. I got so many calls and texts from people that say, I want to pull out my 401k. What do I do? I'm scared. So if you went through that and you saw the stock market come back like we all did over the last 50 days, one day should not deter you. One bad day should not deter you. We also know that between like I would say end of February, mid-March, we saw the stock market drop for 30 days. And that was it. Out of the 250, 280 trading days, however many you have, only 30 of them were negative this particular time. And then the market started roaring back all the way up until like today or yesterday. That was it. That was it. So don't overreact because of one day. Don't overreact and act a fool because of one single day. Do I know what's happening tomorrow or next week or next month? No, there are still things out there that may trip up the market. However, what we do know is over longer periods of time, 1 year, 2 years, 3 years, 4 years, and beyond, we know the stock market tends to move up. It will have its hiccups. There will be something else that's going to happen at some point this year that will give the stock market another hiccup. I can give you a guess that could be second wave of COVID, there's an election, and then you can still have any number of trade wars, murder hornets, or whatever that can throw the stock market off for a little bit. But over time, you're going to be fine, which is why it makes sense just to stay consistent, to go with the index funds, to go with quality stocks. Do not, for most people, it does not make sense to try and pick up a company that has been struggling for a while because you think it won't go bankrupt. So what? There are a lot of things that won't go bankrupt, but it's not going to make it the next Google just because it won't go bankrupt. Again, that's like saying, I got 2.5. Great, you graduated, you didn't fail, but you didn't get the six-figure job, you didn't become valedictorian, you just graduated. Good for you, I guess. So not going bankrupt is not the gold standard for a company. That's bankruptcy and your company should never be in the same sentence. That's not great. That's not a company. That's not a place that you want to be in. People trying to do that are trying to like game the system and double their money overnight. Sometimes they get lucky, like they didn't hurt. Other times they buy American Airlines. Some people made money a few weeks ago. A lot of people lost money. If you see here, Delta, United, that was the stock I was looking for, down more than 20%. We just talked about American being up like 40% the other day. It was down like 10 or 15 the day before, day after, and now it's down 20. You probably lost all that money if you invested in American Airlines like this week, or you got too happy and thought that everything was okay. Those companies haven't changed. They are still in trouble. Nothing has changed. They're still in trouble. It didn't make sense to invest in it back in March, which I told you. It doesn't make sense to invest in it now in June, like I'm still telling you. And it probably won't make sense for the vast majority of them for quite some time. The only exceptions, I think, would be for the long term, and I'm talking 3 years or more, probably Southwest and maybe Boeing. Those are probably the only two that make sense over the long term. So be very, very careful. The easy way to do this, it's easy to spot a lot of these. Excuse me. That's why I know, if I don't know nothing else, I know how to avoid really terrible stocks. And it's an easy process. That's why we have this free class. Make sure you sign for this free class, because about a third of the entire class is based on how do you avoid really terrible stocks? Because a lot of us, especially if you're new, you're not going to know any better. And that's not your fault. You didn't have a financial advisor that came and taught a class. You may not have had personal finance 101 or investing 101. So it's not your fault. But I want to be here to support you and help you to move from choosing these terrible stocks to picking things that actually make sense for the long term. It's easier than you think. You don't need a ton of money. It is something you can do. All right, so I want to pause real quick, take some questions. I'm going to leave this up here, buildingbread.com/free class. I'll be teaching a few classes tomorrow. All right, so I see 2 questions. Okay, so maybe question in the comments. So we'll get to those. All right. Yes, my index fund is my go-to all the time. Absolutely. Can you explain index funds? Jennifer, yes. An index fund is a type of mutual fund. What is a mutual fund? A mutual fund is a collection of stocks packaged together for one simple price. For example, it's the difference between owning one home and owning like an apartment complex. So I have like one home, it may or may not be risky, but if I own an apartment complex, I got a bunch of different people. If one person says, look, I leave, I'll quit, I don't want to live here anymore, that's fine. I got 499 other apartments. An index fund is similar in that it owns the entire stock market. Every single stock in the US or whatever type of index fund you have oil index fund, all oil stocks. You can have a US stock market index fund, all the stocks in the US, all in one fund for one single price, which means that I don't have to worry about American or Delta or whatever stock, because I own them all. I own the airlines plus the Googles and the Amazons and everything else. Over time, index funds tend to get you anywhere between like 7 to 9% per year on average. It does not mean that every year is going to be positive. Warren Buffett, one of the richest people in the world, says that index funds most investors should be in index funds, is what he said. But also, we know that index funds are easier to do and they are on autopilot. So if you're someone that says, look, I don't want to have to deal with the stress of picking the right stock, or I really don't want to deal with the stress of choosing the wrong stock. I don't want to turn around and feel embarrassed because I chose the wrong thing. I don't want to lose money by picking a stock that didn't do well. Get you an index fund, be consistent on a monthly basis, weekly basis, whatever basis that you can afford. Put it in there, leave it alone. You're going to be okay. That is the autopilot's way of building wealth. A lot of index funds are very, very similar. You need like one or two maybe. I would say anywhere between 2 and 4, and you're going to be all right. Okay, can you buy fractional shares of index funds? Absolutely, you can. Most apps, Robinhood now, late to the party, but Robinhood is one of those. Public is one of my new favorite apps. You'll learn more about that pretty soon. So we said Robinhood, Public. You should be able to get it on Cash App. I know you can get it at Fidelity. Yes, you can get fractional shares. I'm a big fan of fractional shares. What is an ETF? An ETF stands for Exchange Traded Fund. They are they're like the cousins of mutual funds. It's like the difference between a sandwich and a hoagie, or a hard shell taco and just a regular soft shell taco. Like they're so close, they might as well be the same. The difference in a mutual fund, though, is a mutual fund and the ETF is during the day. So when the stock market is open, you have a mutual fund, you're not going to see a mutual fund price change during the day. It's going to stay at whatever it is. At the end of the day, when the market is closed, the mutual fund will change and just say, this is the price that we have. Because they take the time to calculate everything and give you a new price. An ETF can do and hold the exact same stock, except during the day, the price is going to change every minute, just like it would have stock. The investments can be the same. The performance can be the exact same. So I want to give you an example real quick of, I'm going to give you a mutual fund and an ETF. The performance, again, is going to be almost the same. So don't think, oh, I need the mutual fund, total stock market index fund, and I'm going to need the same thing in an ETF. That's not really going to help you. So I'm going to show you that real quick, show you that it is almost exactly the same. And then I'm going to go to the other questions. Should I purchase an ETF and a mutual fund? No, you don't need both. I'm going to show you that right now. So VTSMX. So this is called a ticker symbol for those that don't know. As you see here, Vanguard Total Stock Market Index Fund. And this is the mutual fund version. Okay. So I'm going to type this in. And it's going to be from Vanguard. This is a well-regarded mutual fund. It is an index fund, as you see here. And then we're going to hit full screen. Okay, it's going to pull up for us. It's always slow. Last 5 years, it's gone up. It's had a dip. Let me move my face out the way. Okay, I'm going to get rid of this red line. Okay, so this is how this index fund has done. Okay. It holds every stock, pretty much every stock in the U.S. Great, strong. We're here now, right? Now, there is an ETF version of this exact same fund. That one is called VTI. I'm going to change it to green, and they're going to be very, very similar, if not the exact same. As you see, the prices change at the end of the day, but you can't even tell the difference between the two. There's a red line, there's a blue line and a green line, but because they're almost exactly the same, it's not gonna make any difference between the two. Now, you see the difference between these two, where this one's at 48 and 49. Tomorrow, when the market changes over and they calculate the difference for this mutual fund, they'll be right back where they're supposed to be, and they'll be close to identical. It really does not matter which one you choose. It really doesn't. Whatever one you want to choose. You get no benefit from having both. There's no benefit from having one over the other. People would say the ETF is better just because it moves faster. Again, if you're a long-term investor, that really doesn't matter. You can get fractional shares for both. Most apps have both. It really doesn't matter. All right, I'm taking your course now. I'm so sure I'll get some answers. Yeah, you'll definitely get some answers there. I'm a teacher before I became a financial advisor. So I really designed the course as a step-by-step module, if you will. So I tried to anticipate every question that people could ask. And if it's not on there, feel free to email me. But most of the questions that you're going to come across, from setting up your account, figuring out what to invest in, when to sell, how to buy, all of those things are laid out in the course. If you're interested in that course, buildingbread.com/tools, and that will bring you to that course. All right. Oh, thank you. I appreciate it. I'm glad I can make this helpful. Glad I can help y'all. Thank you for sharing. I'll take one or two more questions. Let me see if I missed any. Okay. All right. I don't know if you've already discussed this, but with the market, where is the right? What the market is right now, would you suggest inverse ETFs? Ooh. Okay. So I'm not a big fan of inverse ETFs, especially in this kind of market, only because it can just change like it has on a dime. For those that are watching, an inverse ETF is essentially if the market goes down, that ETF makes money. If the market goes up, that ETF loses money. So essentially, it does the exact opposite. If you flip this chart over, it would do the exact opposite of what the stock market is doing, which can be good if you know the stock market is going down. I mean, if you knew it was going down, you get the inverse ETF. It goes down, you make money. Perfect. Kind of like a seesaw, right? Where the market is now, I tend to avoid those for two reasons. One, we know generally the market does go up. We know that. But two, because this market is so strange, it's hard to say what's going to happen. We're already predicting right now the market is going to have a better day tomorrow. Again, that's hard to call. Futures are up like 100 points. So, that's not a strong indicator. Yesterday, as we talked about here, yesterday we knew we had a stronger indication that the stock market was going to be down, which is why you got an email from me at like 7 in the morning. If you're on the email list, you know that you got an email from me saying, hey, the market's probably going to be really bad today. And look what happened. So it's harder to call, I think, and obviously looking back is easier to do, right? So looking back in March, it would have been a great time to get an inverse ETF. Right now, I don't know if we're hitting like a second dip or not. I don't know. I would say it might make more sense if we start to really confirm a second wave, and if we start to see states start to lock back down. If there's a state that goes right back on lockdown, yes, but again, it's a lot more risky. So is that something I would personally do? But I think there's a case to be made if states starts to lock back down, we go right back into hiding. All right. Let's see. Any other questions? So on Robinhood or Cash App for index funds, how do you search for them and find them? Great question. So in most apps, Cash App included, Robinhood, I'm sure, Public, you're going to hear a lot more about that. You'll see like in this top right hand corner, there's going to be a place to look up either quotes or stocks, and you'll type in those stock symbols. So you can look up index funds and just type in one. I've given you two here. SPY is another one. Again, they're going to do almost the exact same thing. In fact, I will show you. I'm going to put here comparison. I type in SPY, and it's going to be very, very close to what you see here, which is why, you get one of them, you're going to be all right. And it doesn't even show up. There it is. Okay, so you see they all follow the exact same line. SPY is a little bit higher, big deal. They're super, super close. So you would do that exact same process. There'll be a search bar at the top or on the side on any of these apps. You'll type in those letters. It'll pull up and tell you what the price is, how it's doing, and you can buy whichever one you want, however much you want to put into it. But that's just how an index fund works and how you can attain one. Okay, let me see if I just missed any. All right, we talked about fractional shares. You can do that. All right, I don't see any other questions. I just want to double check. All right, so I don't see any other questions. I will see y'all tomorrow. We will see what happens in the market. Make sure you sign up for the free class. That's buildingbread.com/free class. And I want to show you 3 ways that you can get started, even if you're a beginner. So if you're trying to figure out, like, should I invest in index funds? What app should I use? How does investing work? That course is going to help you to do that, as well as how do you avoid some very, very bad stocks, which is something that I had to learn the hard way. So you'll learn more about that as well. So catch me tomorrow. I'm doing 2 classes, one at 11, one at 2. And depending on how many people sign up, I might throw another one in there. Make sure you sign up for that. Thank you guys for coming out. Thank you for sharing this video. And I will see y'all tomorrow. right around 10 p.m. Eastern, which is 9 Central. All right, see y'all later. Bye.